Hello, market update for Friday the 18th of May. After the markets being as high as they've been in quite some time earlier in the year, today, as I say, Friday morning, they're back to pre-2012 levels. So those clients of Green Financial that took profit earlier in the year following my advice are probably quietly pleased this week. The news from around the rest of the world, particularly Greece and China, continues to be doom and gloom, and as the sun broke through the clouds yesterday for a hint of warmth, the volatility this week in both markets and cloud conditions has reminded me of last summer, again in markets and cloud conditions. So at the risk of repeating myself again, the newspapers generally prefer bad news to good, and thus the market falls gain greater exposure than the gains. I will of course be monitoring market levels in general and client portfolios specifically if I think an opportunity to invest for future gains arises. But please remember, my aim when assisting with your financial planning is not to speculate in the short term. It's to provide a real return after inflation, after cost, after tax, in the long term, so that you have enough money for your lifestyle that you desire for as long as you need it. It's at times like these that holding your nerve and doing nothing can often be the most sensible approach, because markets can be unpredictable. As I always say, investing is more about time than timing. Market timing is difficult at the best of times, and at the moment, nigh on impossible. I saw a political commentator at investment house Fidelity agreed with me recently, saying the recent uptick in the market is in keeping with the British weather at the moment. A brief ray of sunshine in an otherwise stormy situation. But enough of the weather. As I wrote in my covering email to my last monthly market commentary, there are many clients who I assist who are not going for growth. Security is the watchword, and despite many commentators warning against this, the big winners at the moment are investors in the safest government bonds, where prices have gone higher because of the perceived safe haven that these assets give. And that's why I've remained a believer in these assets for clients wanting security. Yes, when all around was zooming up, these didn't do very much, but when all is falling, they do the job well. I mention this as I trust it shows my approach to client portfolios, where one size does not fit all, and the benefit of an ongoing relationship with a real person means your finances are managed with you and your situation in mind. Back to Greece and China. In pure economic terms, Greece is not that important, but what worries the markets is the potential for its problems to spill over into other countries such as Spain, where the interest rate on government debt at the moment has risen close to the levels that prompted bailouts in other peripheral European countries previously. In China, the economic slowdown is taking hold, including things like property prices, electricity output, bank loans, and this is cast out on their GDP figure, which still stands at 8.1%. Pretty impressive compared to ours. Next to Greece and China, the news from JP Morgan about their 2 billion loss is pretty much small fry in the grand scheme of things, particularly for somebody as big as JPM. What worries people there is the fact that this was a company that pretty much avoided most of the problems in the financial crisis. So the fact that this has now hit them has really given people the wobbles. But what does all this mean for you, the client of Green Financial? Number one, remember long-term goals. The worst thing to do is to overreact to market volatility and newspaper talk. The nature of things is that any reaction will likely be after the markets as a whole, so being late to the party and then making changes after markets have corrected. The FTSE 100, as I sit here today, has already fallen by about 10% since March. So, on the plus side, this means potential gains, which are there, which will be taken advantage of by the regular rebalancing service Green Financial provides. Number two, the Eurozone only really accounts for about 10% of global markets. So for an international market like the UK, it's far from the dominant influence, albeit a big one at the moment when sentiment is pretty much trumping everything else. To repeat myself from previous communications, it's companies, not countries, that we ultimately invest in. And even in Europe, many of the biggest companies continue to do well, protected in part from their problems at home by their international overseas focus and their operations there. The monthly market commentary, again, in recent months has noted success stories in America and other places around the world. Number 3, some figures from Fidelity. What they say is that valuation matters long term, so investors should look at the price they're being asked to pay today. The multiple of a company's earnings that a share price represents is actually cheaper, Fidelity say, than at any point since the late 1980s. Only at the very bottom of the market in March 2009 were shares much cheaper than the basis on which they're priced today. Number 4, as a client of Green Financial, you will have investments in a portfolio that are well spread between different asset classes. So this multi-asset portfolio returns get smooth. You won't bat the ball out of the park in terms of performance. You won't be winning any investment awards or tripling your money overnight, but you won't have a disaster either. That's the plan. Number 5, and finally, stick with it. The Green Financial Service means regular rebalancing of portfolios, whereby we take advantage of falling prices in one asset class and buy using profits from an asset class that has risen. The same applies for those with regular saving, for example monthly, as it forces you to invest at times like this when the market's fallen and instinctively you really want to walk away. So volatile markets create opportunities, and a mechanical, non-emotional approach such as our Green Financial Service or regular saving means you take advantage of them. I think I'll close with words from Fidelity again, as I couldn't put it better myself. No one is going to pretend that investment is easy at the moment. It's easy to forget at times like these the nature of stock and bond markets. They offer investors a superior long-term return compared with cash, but the price we pay is short-term volatility. We have to stick with it, diversify, focus on fundamentals like valuations, and don't spend too much time watching the news. Thank you very much.